Halifax real estate and tariffs. Is it going to affect us here at all? So look at this, you made it back the second time. You must be some good.
I know, here we are. Enjoying it, got a lot of good feedback. It's fun to do, so
I know.
Here we are. Thanks for having me, as always.
I'm shocked that an agent will actually watch it.
I'm shocked that an agent would admit that they watched it.
True enough, true
Everyone
enough.
likes to watch, but yeah.
Yeah, that or share it and say like, my God, what are they doing? Either or, right?
Yeah, hey, it's all counts as views. It's all views.
So I know you were building apartment buildings. Are you still in that realm or?
No, I actually sold off my biggest development site. I was very close to starting construction, like we had our permits pulled and everything. Yep. But the rate market was, that was when it was in the upward trend, and there's a business model for it. I'm just not sure that it's the business model I like. And when you have to pay retail, like I can't build in-house. And the real way to make a go of it with new construction is be able to self-build.
Yes.
And, I don't have a construction company. So I just felt it made more sense to sell that and then focus on what I do well and what I really know, which is buying kind of more older stock, kind of your B product, and then fixing it up, because I can get that, for almost 33% of the cost to build.
Okay.
Right? So that just made a lot of sense to me, and I'm happy with it. Bittersweet though, but
that's good. Well, I'm going to segue right into this. The increased, if we get the tariff,
yeah,
right? Do you think that's going to affect new home prices here?
It's going to have to.
Yeah.
I mean, we import our glass from the States, right? So look how many beautiful windows in this lovely place, right? There's going to be a cost associated with that. Even though people are like, no, our windows are made in Cape Breton, or they're made out of Quebec or wherever. But the glass isn't. A lot of the input products for the glass come from the States. Mm-hmm. So it won't be a direct 25% on the cost, but at some point, the initial provider of the glass is going to be charging 25% more, and what percentage that is of the end product, it's going to be in there. And then when you think gypsum, which is obviously all the drywall, all of that for sure would raise the cost of construction. There's no if about it. Like it would happen. It wouldn't be a direct 25% because that's not the way the production chain works, but it'll be in there. It'll be baked in there. Because
I remember during COVID, the prices kept going up because the shortage of supplies. Yeah. And here we go again for another big increase. I think the average new construction per square foot maybe is around $280 here in Halifax. High side maybe $340.
Yeah, your contractor grade finishes kind of thing. Yeah.
Yeah. So I mean, you could get upwards of maybe closer to $300 then per square foot, depending.
Yeah, the interesting thing is though, if these tariffs go into place, mm-hmm. the rates are going to go down, right? Almost immediately. We've seen that in the last couple of weeks, especially, but certainly over the last month, even the rates have been going down. And when these rates went in place, immediately the 5-year bond dropped off a cliff.
Yep.
And now, since there's been this reprieve of 30 days, the bond has recovered a little bit. So if there is a silver lining, if these tariffs go in, rates are going to drop. And so that lessens the cost of holding the land and financing these projects. So that may come out the wash. And then if the economy really suffers, it could also be that labor goes down in price. I mean, that's a terrible thought. No one likes to hear that. But a big part of the COVID price increases were the cost of labor. Labor went through the roof. And everyone was busy and all these things. But if that ceases to be the case, maybe some of the labor comes down in price. So I don't know. It's hard to say exactly what effect it'll have, but it'll make the cost of building more expensive for sure.
Oh, 100%. So $648,000 is the average selling price here now in Halifax. I mean, if the tariffs do come in, like where do you see that average selling price? Because if that's on, let's say, new construction, right? If mm-hmm. your average price of new construction is going up, obviously then resale is going to go up because they want new construction.
Yeah, for sure. And again, I think in conjunction with that is also going to be a lower rate environment, which could be a double layer on that pricing increase. Mm-hmm. So it's certainly possible that housing will go up if the tariffs are increased. Again, none of this will matter if everyone loses their job, right? Because there's that part of it. Like these tariffs are going to have real impacts on people in certain sectors who are then going to be very tight with their money, and that could eliminate a number of buyers from the buying pool, especially over long term. I think short term, everyone just sees what's in front of their faces, and if they see a hot spring market with lower rates, they're going to buy. But if these tariffs were to stay in place for a long time and the economy really suffer and you start to get layoffs, then that could come back around. The interesting thing though here, so much of our labor is in the public sector, and this is one of the reasons that people support the idea of a big public sector, is that these tariffs aren't going to cause layoffs if you work for the public sector.
No.
In fact, like if you are working for the public sector right now in an election year, if anything, you might have more job security than you do in normal years, despite these tariffs. So I think also there could be a little diversion of us from maybe some other parts of the country, because we have such a high percentage of public sector employees that we may not be as directly impacted if these tariffs take hold long term as some other markets.
No, great point. But if you look at, let's say the sweet spot for any buyer, I believe here in Halifax is definitely under 700,000 for sure.
Yeah.
That's the and there's even a ton of homes even selling under 6, under 5. Like that's still good.
Under 5's getting hard, but yeah.
Yeah, well, you know what? Look, we had 42 homes sell under 500,000 this year, which is still quite good. If I had to look under 700,000, there was 143, but last year there was 149, but not a big difference. But the biggest delta, I wonder if it has anything to do with, mortgage rates changing, et cetera. Last year, we only had 11 homes sell over $1 million. This year,
really?
In January.
Oh, yeah, okay.
Yeah, and then this year, we had 24 homes sell over $1 million. Do you think...
homes over $1 million are just way more common than they were every year. It used to be so rare to sell a home over $1 million, and now it's just so commonplace.
I remember back in the day when you're getting a $500,000 home, you had a mansion.
Yeah.
Right? And now it's like, oh, you're getting a house that's $500,000, you have to put some work into it, right?
Yeah. I mean, the down payment, like the changes with the down payment requirement,
you think that made a difference?
It certainly could. Yeah, that's interesting to see so early in the year too.
I know.
Because a lot of those bigger houses don't trade until a little bit further into the season.
No, I was shocked to see that. But like last year, we had 340 homes list in January, and this year we had 350. And then 210 homes sold this year as compared to last year, and 193. So not a big difference between January and January.
Yeah. I think, again, there's something bubbling though. Every single person I talk to is like, I've got this coming on, I've got that coming on. And usually you hear that sort of energy late March, but to hear it in the first week of February, like I was saying when I walked in, I'm like, I did 6 CMAs in the last 2 weeks. And these are all things that are going to be coming on. And a lot of people seem to be saying the same. So I'm curious what our listing count, new listing is going to be like for February and March, and how that'll compare to last year.
Well, we typically would have over 3,000 homes being bought to the market in any given year, except during COVID. Obviously, it was changed. But on average, we've only ever sold 4,400 homes. Like, that's it.
Yeah.
So is it because, so last January we were dead. Like our team, we didn't have any closings in January. That was the first time since 2014.
Yeah.
We didn't have a closing. But like this year, coming into January, we had, I think it was 11 deals already like on the books. Like we are way above.
Yeah, December was hot.
Yeah.
Right? Something happened in November,
odd.
December. It just got hot, and it seems to be continuing now. And we'll see if it holds up, because all this uncertainty around the tariffs and all these things. We'll also see if it's just a spring market that happens to be starting early, or if this is going to be a really bullish year. It could go either way. It's hard to read this market right now.
I know, but we do need more inventory at the end of whatever you said, right?
Yeah.
There was 49 homes selling over asking, and long gone are the $100 over asking. I think the average now, is around 22,000 over asking. So 69% of what's listing is selling under ask, and the average under ask right now is at $42,000.
What?
So this is a shocker to almost everyone I speak to, and I'll tell you why. So when you, let's say NSA or someone puts out stats, or your brokerage do, they'll look at the listing price to when it's sold.
Yeah, like so the original listing price versus.
This is the original listing price
Yeah.
to when it's sold.
Right.
So the average is 42,000. Isn't that incredible?
Yeah.
So do you think that sellers' expectations are still out the window, or are agents buying listings?
I mean, two things can be true and probably are in this case. I mean, there's definitely agents who buy listings, and what that means for people who maybe aren't an agent that's watching this, like you just promise a number that you know you won't get, but it sounds really good, and you get the listing, and you hold the contract for 120 days or whatever, and then you know after 30 days you'll drop it down to where it should be, and then eventually sells for 40,000 under the original asking price. I mean, gosh, I wonder how that would compare to past years, because it used to be really commonplace to reduce your pricing, and I don't know what anecdote you would sort of say or what rule of thumb, but if you haven't sold in, say, 30 days or 10 showings, that's usually a pretty good indicator that you've got to be at least 5% overpriced, right? So if this here, based on that average that you're saying, like, well, that's 7%. So that means if you haven't sold in the first little bit of time, that means you're going to sell under ask, and it means you're probably 5 to 7% overpriced anyway, and that lines up very much with that number. I think it's a less forgiving market now. Buyers are just continually getting more and more savvy, but they're still aggressive on homes when they see value, but there's not this great sense that I just need to buy something, and if I overpay, it's okay because the trend is upward. So I think the pricing needle has to be a little bit more specific or a little more precise than it did when back in the day, where you could be plus or minus 5%, and you'd still probably sell the thing.
Oh, absolutely. I mean, because buyers, they're not just looking at one house now. They're looking at maybe 10, maybe 15. Like and they're not making the decision right away. They could I don't know.
I also think too, this is indicative of the fact that the higher priced homes are struggling more, right? So if you're in the 899,000, asking price bracket, when you have to do a couple reductions, you're not dropping by 10 grand.
No.
Right? And that part of the market is struggling more than, say, the sub 500 or sub 550 even. So I think probably that big number of a $42,000 reduction from the original ask price to sale price is reflective of some of these higher priced listings having to come down.
Oh, they would have, yeah. But this was interesting too. Between 790, 900,000, there were 52 homes that sold.
Yeah, and how many last year?
32.
Yeah.
So, I mean, we're still left with local buyers.
Yeah.
So if you're buying a house that's $1 million, you need to have a minimum income of $200,000, and that's not talking about any debt service ratio.
Yeah, at least.
Yeah.
At least. Yeah.
So where do you think these people are coming from? Are they people who are moving up, or,
I think there's always been a sneaky amount of money here in Halifax that people don't necessarily know is there. And there's a big influx of new people who tend to come here pretty liquid. So they're putting down large down payments in a lot of cases in that price point there specifically, I see, because there's maybe not as many of them up here, but they love being in that because that's the new construction price point range. And that's what a lot of new to province people really seem to like, is the new construction.
Yep.
And so they're liquid enough, they'll put down big down payments because oftentimes they come from more like saving cultures than us here locally. I think there's also a lot of people who had pretty good windfalls on their houses in these lower price brackets. So this is kind of your second home price bracket now, which is crazy to think. But you sell your first home for somewhere around $550, whatever home you bought 5 years ago, and you sell that in order to buy in this $750 to $850 range.
Oh yeah, I was with a seller the other day. I would have helped them back in 2017. They bought for, I don't know, $225, and I could get mid 500s now for that house for sure.
Yeah.
So their mortgage is, like maybe 100 grand left.
Yeah.
And they have way more buying power than the average. So if you bought before COVID, your buying power is incredible.
Yeah. I mean, the tricky thing is, did the increase you got keep pace with the increase the other price points got, and do you have any extra wage increase over that time as well? Because there's a big portion of the population that wouldn't even be able to qualify for their own home if they had to buy it again.
Not at today's rates, no.
Yeah, so that's kind of kept some people stuck in homes maybe longer than they intended to be. But also these numbers here, we're starting like from cheap homes to more expensive homes, this is also how the deal flow happens, right? Like these people have to sell these less expensive homes so that they can buy these homes, so that those people can sell those homes to buy these, and these people can sell those to buy those. So usually it's a pyramid. There's the most people down at this, and it works its way up, and that's how money flows through the market. And it even kind of tends to flow like that through the season, because these more expensive homes are the family homes, meaning they sell off the school year, right? Like people want to list their home after March break so that they can sell their home when school ends, and then they can move into their new home and get settled before September, which is also why you'll see this average price increase through the year. And people think, oh my God, it's just that houses are going up and up and up. Well, part of that is actually the makeup of the houses, like the sample of houses that's selling
Correct.
in the spring and
It's
summer
not
are
necessarily
different.
the price is going up, it's the
Exactly,
inventory.
right? It's kind of seasonally skewed a little bit there, but that is a lot of number at those upper price points, because those have been a little bit softer, and there have been more of these price reductions. But it speaks to the fact that I see those things. If you have a good home and it's well priced, it's still getting gobbled up. It's just not getting 5-6 offers.
No.
Right? Like I saw a what I call like a box checker, right? Meaning it just checks all the boxes. It's got the ensuite bath. It's got 4 bedrooms. It's got 3.5 baths. It's got double car garage, a nice lot. It's got open concept living area. It just, no one can go in there and be like, there's something I don't like about this home.
Yep.
And a great neighborhood, very reasonable price, completely on par with the price per square footage of what it should sell for. And it only got one offer, but that still is a sale. It's still sold, but it was only one offer. So I think those things, if you're offering good value, they're still selling, just maybe not quite as they're not quite as busy.
Sell. I mean, it's indicative, right? It's 52 days on market now, on average. But you do have homes that are selling, within a few days. Are you still holding offers?
Yeah, 100%.
Which price points?
I am of the mind of, I don't understand any real harm in holding offers. So I don't think it necessarily needs to be price dependent. I just hold offers. I think it's as a seller, it's a good approach to get as many people through your home as possible. So if you list your home and you sell it immediately to the first person, I don't know, you sort of always are left to wonder what the other people will go through. Ultimately, it's up to the seller, but usually it's just a general rule of thumb. I hold offers, period.
So,
and at the higher price points, I might say something like 24 hours, or maybe it's a shorter window, 48 hours. But I pretty much always do. Yeah.
So if I'm in a buying role, and I only do a few buys in the beginning of the year, see, I would just find that annoying. Like, I'm coming in, like, you've been on the market now for 30 days, you're going to hold the offer for 24 hours?
Oh,
like,
not that nonsense. I just mean like in the first window. Like if I go on the market on a Wednesday, I'm looking at offers on Monday.
Okay.
Right? Now at a higher price point, I might say, you give me an offer, I'm going to need 24 hours to present it.
But why?
Well, because why? Which one? Why the 24 hours at the higher price point, or why hold the offers in general?
So if I'm listing a $2 million home, why would I hold that offer for 24 hours?
You as the buyer?
Seller.
Well, in case there could be someone else who also wants to view the property. It's a calculated risk. That offer being open for 24 hours doesn't mean you actually need to sit on for 24 hours. You would just look at the scenario. Someone submits the offer. Do I have any other showings lined up tomorrow morning? If I don't, then I entertain the offer when I get around to entertaining the offer. Like, you don't have to wait till the 23rd hour to do it. I just think you'd be remiss if you put the home on the market and someone sends you an offer in the first 3 hours and it's only open till that night, like, you've given yourself 8 hours of exposure to the market. Like,
I
think that's tricky,
crazy.
Right?
And no, I would never do that to my seller, because you do want the most. But like, I'm getting ready to list a house here in Bedford. I'll list it on Thursday. And because I know the price point, I will keep offers till
Yeah,
Monday.
you'll have multiple offers on that property.
Yeah.
You just will. So I think, it'd be, I think it would be a mistake to not hold them, right?
Oh,
but I know at the higher price points, it's a little bit trickier. But also, I find that people who are at higher price points, they're not the type who are going to be. I don't know. I don't think you want to rush those folks and be like, you have to come there tonight at 7 o'clock. Like, I think these are people who value their time maybe higher than other individuals.
Yep.
And so they also appreciate having the opportunity to get in there on the next day and not feel like the host is already gone. But also depends a little bit on your pre-marketing campaign, like stuff like that. I think a bit more goes into your pre-marketing campaign, so that even if you hit the market on a Thursday, if you have a listing that's $2 million, I would hope that you've also marketed the property in the lead up to that as much as we're allowed to.
It's 3 days.
Right? You know, exactly. Like at least get it out to the world so that you can hit the ground running on that date, right? Because that's a big property. It takes a little bit of a rollout to do that. But
Yeah. So if the tariffs do come in, so do you really, think that our market will stabilize even more towards a balanced market? Or do you see, let's say, first-time home buyers still pushing through because it's better to buy?
first-time home buyers, so this is going to sound really bad. I think until maybe 10 days ago, 90% of Canadians didn't know what a tariff was. And I think even today, half of the Canadians don't know what a tariff is.
Most Americans don't.
So, well, yeah. So then you're talking about first-time home buyers. How many of them understand tariffs? If they're an industry that's not immediately impacted by them, maybe not that many. They're also driven by sentiment and emotion. So I haven't had a single first-time buyer say, you know what, I'm going to hold off here because of these tariffs. They just haven't.
No.
Right? They're living in their parents' basement, they're living in an apartment, or they're pregnant, or they've got a wedding coming up, or they just got married and they've got a bunch of money, as wedding gifts, or they just saw their friend buy a house. Those are their emotional cues that they're going off of to buy. World economics, I don't think factor into it as much maybe as they should. So those first-time home buyers still seem to be pretty hot to trot, for lack of a better term, and then their money trickles through the market like we talked about because they buy a home and that person then buys a home and so on. This will change if they work in industries that start to see actual layoffs. But that trickle down even takes a while.
Oh, yes.
Right? So in the short term, I don't see any first-time home buyer making a meaningful change, or at least not on an aggregate, like not a statistically significant change to our market.
No, I don't think it's going to make a difference either. It's interesting to see because I do wonder about the higher end market because it's not just in the South End. It's in Bedford. There's homes in Fall River. In places of Dartmouth. It's going to be interesting to see what happens to the homes that are 1.5 plus, if that market will actually slow down.
Yeah. Yeah. Again.
It's hard to say.
It's hard to say, and maybe at that price point you get less public sector buyers, you get more private.
You would.
Right, and so they could be more affected by that. They might be more exposed.
Yeah.
But how will that be countered by the fact that you could get an interest rate in the low threes again?
Wouldn't that be great?
Right.
But, back in 2016, I think we had in the threes.
Oh yeah, somewhere in there. Like there were 3.39s out there, 3.19s and stuff.
Yeah. So if you had to give any advice to a first-time home buyer right now, they're worried about what's going to happen in the next few weeks, what would you say to them?
First of all, I'd say, hey, that's great that you're actually paying attention to that stuff because most of them aren't. I would say understand your job, right? Like we haven't been through that generation, especially, but even like our generation hasn't been through like the big recession that maybe previous generations had gone through. The early 90s. Obviously, we had the financial crisis, and that was very, very significant. But it used to be commonplace that people got laid off. When was the last time you heard of someone in your sphere getting laid off? Like it's not that common, right? And so people don't really take stock of their value in the workforce, the security of their job because they've taken it for granted for a while. But I think if I'm a young person, anytime I'm buying a home, but certainly in an uncertain world like this, I would want to take stock of do I have a job for 5 years? Like a reliable job that even if it disappears, could I, go to the market and secure another job? That's something you should always be thinking about when you sign a 5-year term on a mortgage.
Yeah.
But maybe more so now. Like if I was I'm in trade, my whole industry runs off North American trade, maybe I would pump the brakes a little bit on a purchase right now until the dust settles a little bit.
But I agree. We are we're a government town, and I don't think we'll be that affected here. I mean, obviously there are going to be some things, but I would say most people are are going to be spared their jobs.
Especially here in HRM. We're not obviously the port could be affected.
Yeah.
But military, hospital, even university. Universities have their own thing going on, but a lot of these things I don't see going anywhere immediately here in town.
So where do you see, our last question, so I'll let you go. Where do you see our market, mid 2025?
I think this is going to be a pretty bullish year. I'm worried that we're going to be on a little run price-wise.
You think?
I mean, this is just what I'm feeling here early in the year. I mean, we're already up 5.5% from January of 2024. Like, that's not nothing. And like, there's a lot of stuff that hasn't hit the market even yet. Yeah,
That's so funny. I had Keith Kenny here before you, and he said exact same words. He said bullish. But when I look at what I've just done in the past 2 weeks, I have had 8 CMAs. Our team is like, I have like 7 offers down on my desk waiting to firm up. To me, this is normal. Like during COVID and after COVID, I was listing, I don't know, 6 to 12 homes a month. And then in COVID, there were so many, it was just, anyway, it was so different. My business right now is reminiscent of 2019.
Well, 2019 was a pretty aggressive year.
But
right?
not the way it was in COVID, but to me, I am back to normal.
Yeah, but I mean, 2019 was the most aggressive, busiest year on record until 2020, and then until 2021. Like, those were all pretty aggressive years. Like, we used to never have bidding wars, and I used to count how many bidding wars I was in the year because I would keep numbers on it. Like, okay, I was in 5 bidding wars. There was 3 bids, or there was 4 bids, or there was 5, or there was 2. What percentage was it over ask? What was the price point? To try to have a better strategy for the next bidding war I got into. And I remember in like 2019, I was in something like 21 bidding wars after Q1. And I'm like, oh, like I can't even keep stats on this. It's just everything is going to be a bidding war.
You can keep stats on that.
I can, but like it gets
but
overwhelming.
But 69% of homes are selling under asking.
Yeah, I mean, that means 31% are selling over asking, right? So there's always going to be that, like, I don't think that's not a balanced market, right? 31% of property is still selling over ask. And even at the worst time of year to sell a property, what's our days on market?
No,
it's 52 days.
It's only 23% of homes selling because you got a bunch of homes that are then selling at ask.
Asking, okay, so 31 at ask or above, that's still pretty damn strong. And 52 days on market at the worst time of the year is still a pretty good seller's market. Think about that 52 days. That means every home that, for every home that's sold in 90 days, there's one that's sold in 20, right? Which is about as quick as you can sell a home.
Yep.
And the homes that would be, say, from 50 to 90 days, that means they listed November 1st to December 15th. So that is a number that you would expect to decline here through this quarter. So we could be back down to an average of 30 odd days on market and around 30 to 35% of homes selling at or above asking. That's a pretty strong market. But it's just what's going to give first? Are the rates going to drive people and pricing up, or is a recession going to take hold? It's very difficult to predict. All you can go off of I hate to say it, but what is the energy in the market? And the energy in the market is very good. And rightly or wrongly, real estate tends to be more emotional than people would expect.
So, let's place a bet.
What's the bet?
I don't know, $100.
On what?
That I don't think our market's going to be any different than it has been any other year apart from COVID. I just think we're back to normal.
So what's price increase year over year?
Well, typically, prior to COVID, it was about 2%.
And that's what you think it's going to be this year?
I'll
take that bet.
No. I think we're going to be more than 2%. I just don't see I just don't see it being bullish.
I would say if we are less than a 5% year over year increase come Q3.
Okay. That whole prices going up.
Yeah.
To me, that's only indicative of what the inventory is.
Right. I mean, I think we're saying the same thing, just from different sides of the coin,
look at
right?
That. You have this many homes. You have 90, 70, 76 homes that sold over $1 million, right?
Yeah.
So that's going to drive the average price up.
Yep. Yeah, I think I think we agree more than we disagree on this. It would be hard to formulate the terms of the bet, but I think a 5% year-over-year increase on
Yep.
pricing is a pretty darn strong market. And I think then when you break the market down into its segments, the lower half of that market is, going to be likely quite a bit higher than that. Because again, if you take 5% at a glance, I think it's more likely that the stuff over 650 might only go up, say, 3 to 4%, which means the stuff under is likely up around 7%. Again, like that's pretty strong growth. But I also agree with you that all this tariff, all the rate stuff, all of that, you can borderline throw out the window because it comes down to supply and demand. And that seems really reductive, but it's true. Like we are only going to transact around 4,000 homes a year. And when you think of what percentage of that is going to be first-time buyers that are going to buy in spite of everything, what percentage of that is going to be sales that have to happen due to distressed sales, divorce, job loss, death, and then what percent is going to be relocation because we have a big public sector relocation. Like we are going to do our volume, and we are going to have enough demand, sort of built-in demand, that it's hard to see any price increase because we're not increasing inventory at all.
So we got to come up with parameters.
Of this bet?
Yep. I don't know. I can't think right now because
All right. We'll figure it out for
I'm
next
under
time.
pressure.
Yeah.
But I think
we both agree. Like if you're saying it'll only be like 5%, I'm like, yeah, it'll be 5%. Like I think that's pretty bullish, right? But yeah, it's just gonna be different. It's gonna be different. Condos are a little hard to predict. Multi-units really hard to predict. Higher end of the market's really hard to predict. But the good old 550 and under, it's as reliable and robust as I've seen it.
I know, it's great, eh?
So.
Well, you're some good man for coming out again today. God
My
love
pleasure.
ya.
I got to run and pick up the kids.
There you go. But we'll get you back again because I like
For sure.
debating with you. You know what? Who would be good in sitting down here? That's Ben, because he'd be really saucy.
Huh.
And
Bring him out. Bring him out. No, it's good. I love talking about this stuff, and I think it changes every month, so it's fun to check in on it every now and again.
I like it. All right. We'll talk to you later. Thank you.
All right.